Well, another IT company, we are KPIT Technologies in focus. Now, with KPIT, the numbers are very good. Deal wins are good, revenue growth margins, but the bummer, if I can call it that, is that there is no guidance. So let's welcome in Mr. Kishor Patil, co-founder, managing director and CEO at KPIT Tech. Mr. Patil, good morning. Thank you for your time. Prashant this side. Why no guidance, sir? You have enough orders on hand, you have visibility, but no guidance. Why is that?
I think we should start with celebrating something which already have in hand, which is rare in the industry right now.
No, it is rare.
That's a good way to get into the next year. So that is the number one part.
Yeah.
The second is, I will answer your question, but just to give you if you look at the deal wins have been very good. And if you see that there were certain questions earlier about we have won this large program, SDB, is that over? Are there going to be new programs, etc.? So we have, MBRDI, we have also the partnership which we have announced during the quarter. So the point is we are making a good progress overall, and we are also, increasing the pipeline. In the quarter two, we said that the market is a bit uncertain, soft, is what I said in the analyst and other calls also. In the quarter three, we said that we are moving from there and we are seeing a better visibility. Things are happening. We know exactly what they want and what we need to address, and we are ready for that. On the quarter four end, now that the March end, I feel we have a better understanding. Not only that, now engagement and also the pipeline to do that. I think, if I may say that, so there is a good progress which is happening. What is happening in the US is kind of an interruption, and the dust should settle down in a quarter or two. It is not a full, it's not like a 0-1. It's happening in pockets, things are happening. But some of these larger engagements, wins which we are having, already we have started working in some cases we have started transitioning, but the big scale up is, I think, will happen once this uncertainty we should go in next 3 to 4 months, and I think that will give us that would be a good time for me to come back.
With the guidance, right? in 3 to 4 months. So it's possible you reinstate a guidance once you have this some more clarity coming through. But at this stage, as you look ahead, will we see at least a 10% growth for FY26?
Yeah, I know that you want to put me a number, but I can only say that.
At least. That's, and that could be lower number as well, but gives us some sense.
No, I think, let me tell you, it is not that we are a pretty ambitious company and we have certain goals. And I have always said that if you look at, I am very confident that if we go to medium term, if this interruption was not there, we would have been anywhere between 18-20%. So I think that's what we are calibrating due to interruption. So this year, this first half, of course, is something which is going to be a softer one for this reason. But I feel we should be in a position to come back reasonably well in the second half.
So, Mr. Patil, just to understand that what you said is that if there was no tariff uncertainty, then you would have been reasonably confident of doing at least 18 to 20% growth, right? Which is ballpark what you did in FY25. Yeah. So should we take that as a sustainable run rate? And this is not a question only for Q1 or Q2, but is 20% growth a sustainable run rate for KPIT Tech, X of global disruptions, like what we are witnessing right now?
Absolutely. And that's what we have been saying, that in a medium term, we have been saying that that's what we can generally
Got it.
And if you look at we have done that. I think this is at a high level, I would say
absolutely,
that. But
absolutely.
Put any number right now.
No, absolutely, sir. We're just trying to understand, because from a higher base of almost 35-40% growth, now you're saying 20% is very sustainable for the company. Now let's talk about the current disruption, because from what you're saying, it seems that everything has not stalled on ground. Your partnership with Mercedes is progressing. I think you've also indicated that you could be looking at more wins in China. So to what extent can you give us some more color have companies deferred, decisions? Will program ramp-ups be, say, impacted? What exactly is happening on ground? Because I think we'll have more clarity in July once this, deal window, 90-day deal window is open, is shut. But exactly what's going on and how much more additional revenue are you hoping to get from the Chinese OEMs?
Chinese OEM, yeah. So let me first address China and then I will come to your second question. So China is more strategic for me. I mean, for our business, because it's the largest market in automotive, it's a very innovative market. So we want to build an organization there. I mean, we'll have revenues, this, that, but we'll be patient. It's a long-term commitment we are making to build it. But at the same time, we see clear opportunities for us to engage with them. Whether it is first for understanding technology and taking it to our global OEMs, how efficient it is because they want to bring some of those features in their cars, etc. The second is for our global OEMs who are in China to build a competitive features for China market. And third is some of these Chinese companies who want to go outside China, what we can help them. So I think there are 2-3 ways, and that's what we are focusing on. It is going to be a little long haul for us, I would say at least a medium term, but we are making very concrete progress in building alliances, partnership, engagement, and building our own organization to begin with. And of course, very importantly, first priority learning from China. So that's what we are doing for the first part. Coming to your second point, right now the way it is globally, most of the OEMs have the production program in next year or year after. So 2.5 years, even if they delay a little bit due to some of these changes, it's between 2 years to 3 years. They have most of 2 to 2.5 years, their production programs are coming out. Most of them are horribly late. They are not sure about, they are facing some quality issues and etc. I think in that case, that's where as you know, KPIT as an independent software integrator, we have built platform, we have built technology, we have tools. And what we have done is we have built a very, very compelling story for them in terms of AI plus platforms plus our knowledge, what we have. And that is what we will be in a position to take.
No, sir, I was... Sir, please, my apologies for interrupting. Is just because we're so hard-pressed in time. I completely understand that. I mean, the solutions and the tools that the company has already built and the relationships. My question was more direct for the here and now. I mean, do you anticipate a disruption in deal flow or in revenues in Q1 and Q2 till this settles?
I don't think so. I mean, if you really look at OEMs, because they are in a hurry, they have to deliver. The point I was trying to say is they have to deliver the programs and they have to deliver in a different way. That's what they have to realize. So actually, all those actions, discussions are happening right now. So it is a question of a bit of a time. So the only point, if you ask me, also we are doing very well on the off-highway commercial part also. The only place where probably, if you may ask, is there is certainty will remain for some time, and which is a very, very small part of our business is tier 1 business. So I think that's what I would put it.
All right. Hi, Mr. Patil. Good morning and good to hear your thoughts. You know, your order book is quite good. The potential for business is very good. The only problem was you're not giving us a guidance. But as you said, in the next few months, hopefully we hear on that front. I wanted to focus on Europe. Europe, you know, you're doing it at a run rate ballpark of around 75 odd. Then it went to around 80 and it continued to grow. But in the past quarter, there's been a bit of softness out there. It came down to around $77 million odd. What's the outlook out here? What is the run rate you should be looking at from the European business? And also the other positive has been the margins. I recall, Mr. Patil, over the years, you started at around mid-teens, it went to high teens, and now you're clocking 21%. Say in the next few years, where do you see this margin number headed? And in the near future as well, should we be counting on a 50 to 100 basis point increase in margins on a year-to-year basis?
I think I'll answer the first question. I think first, our goal is to see how we can help our clients, which are in a real pain. And I think this, the large pipeline we have, which we have mentioned, is the highest pipeline we have in our pipeline is from Europe. It is across the geographies, but the highest is from Europe. So I think that is something which will come back. I don't think, when we are already engaged, some of those projects have started, transitioning is happening. So that will happen, and you have seen some of the announcements. So I don't see a big issue on that part. On the margin side, I think we have worked very hard on this part, and we believe our current strategy would be to maintain the profitability. As you know, that most of the OEMs, most of the service providers or technology companies globally have margin dilution during this quarter and last year. We have maintained that, but we believe that in the next year, our goal is to really reinvest into some of this problem solution fast, accelerate that, and AI transformation. So we will be making more investment in this area. So right now, I'm not sure whether we will be in a position to increase the margins from here.
But you can sustain at 21% for sure, right? That
Absolutely,
confidence you have.
Yeah, that's what we.
And in the next few years, you would obviously look at improving from this 21% odd mark. Once growth comes back, once there are finalization of more deals.
We'll see where we are, and we have to see where the currencies are, and then we can take the view. Nobody nowadays in the world knows what happens tomorrow. So, yeah.
Indeed, Mr. Patil. We appreciate you joining in. I recall many quarters ago, you told us that 20% is possible and then 21%. Congrats on that front. The globe is a little bit uncertain, but you're giving a hint of optimism in the commentary that maybe things improve from here on. Appreciate you joining in and giving us all of those details.
Nigel, the analyst at JP Morgan, Ankur Rudra, says that if KPIT were to do 10% growth in FY26, so how difficult is 10% in this environment? It's only the third company in their coverage universe which will do 10%, if KPIT does 10%. So I think that's essentially what Mr. Patil was talking about as well, that he began by saying, I mean, you should, in this environment, the way they're doing, actually has been very, very good. But of course, I mean, environment over the next 3-4 months, maybe clarity, then the guidance is restated. We'll see. We'll find out, as we heard from the company. Well, let's